Hello, everybody. Welcome to Real Estate Investing for Busy Professionals. My name is Daniel Homland. This group is the Intel REI Club, and we're currently in the middle of transitioning to an external group. So welcome to everybody who's here through LinkedIn or Facebook, and of course, to everybody who's here from Intel as well. Today, we have Andrea Dwayne, who's coming back. She is the first person to come back 3 times because we continuously need California market updates. Andrea, why don't you introduce yourself and take it away? Oop, I don't think we're hearing you, Andrea. I think you're on mute.
You're right. I politely muted myself. So hopefully you can all hear me. I'm Andrea Dwayne. Can you hear me now? Fantastic. Here in the El Dorado Hills area, also very close to Folsom up here in Northern California. So those of you who I've met previously via video, so nice to see you again. And all those who are new, so nice to see you. I'm in my 19th year in real estate here locally. So I've been a very active agent and I really love coming here to present to you to really help educate you on what's happening in the market from a insider's perspective, so you have a true understanding of what's happening locally in the marketplace, and then also to assist you on strategies and tips for investing, because that in fact is why you're here. So this is the first time I'm going to be using Google Meets as well. So for those of you who've already heard this, apologies, but a little grace while I pull up my presentation to present to you today. I won't be able to see the rest of you. I'll just be seeing my presentation screen, hopefully. So any questions, I'll have Daniel kind of hold those until we pause. We'll continue for the balance of the presentation. So I'm going to go ahead and do my best to present my screen. Oh, it says I'm not allowed yet.
What is that? You're not allowed to present your screen?
Yes, it was giving me a not allowed.
Boy. Okay. Let me see.
Permission settings.
I'll go grab your presentation and drive it for you. You sent it to me earlier so I could review it. So give me 2 seconds to do that. While we're doing that, are there any opens or anything that you would like to say, Andrea?
I'll defer to the group if they have something that they wanted to share first. I'll be talking for quite a bit today, so. Well, if not, I'll jump in at least with a quick overview while Daniel pulls up the presentation. So today I really want to give you a 2023 market perspective of what's happening. So we're going to start off with kind of a 2022, a look back. I always like to give a kind of in arrears look at what we just experienced, and then always a look ahead. So I like coming here, especially at the first part of the year. It's a trickier time of year to really assess how things are going to unfold in 2023 because the market is very seasonal and it's very cyclical. So we're coming out of a slow period in the marketplace. So what happens in the fall, winter is not indicative of what's going to be moving forward in the marketplace come spring and summer. However, the seasonality of the market will always tend to have this rhythm. Also, we want to talk about the truth behind the data. For me, it's so important for you to be able to understand and distill the truth behind the information you're getting. I always believe that the facts and the data don't lie. However, how it comes to you is not always as it seems. So we're going to talk a little bit about that. Then I'll give you a quick Folsom real estate market update in the chat later if you want to know about different areas in California, specifically more to my market, Northern California, Sacramento, El Dorado, Placer counties. You can leave that in there, and then I can always add that data to the slide and send that to Daniel so that it always lives within your group. And then we'll discuss kind of the unique factors at play in the market today, and then we'll dive into the 5 benefits of a 1031 exchange, and then the keys to really understanding the 1031 exchange. So the next slide is just a little bit about me. If you needed to get a hold of me, that would be on that next screen. Thank you, Daniel, for being the boss. I appreciate that. Yep. So there's the agenda I just went over. So you'll have all of that outlined. I I like a super tidy, organized thought process. So I always want you to kind of know what we're going to cover, and that's what we've gone. So if you want to go to the next slide, Daniel, we are ready to roll. Perfect. So let's talk really about that look back on what's been happening in the marketplace in 2022. So overall, the median sale price was up 7% in 2021, but really here's what you need to know. So we probably all realize that the Fed raised interest rates 7 times in 2022. We also know that since May of 2022, the median price declined 15%. So you might be like, hold on a second, Andrea, you just said prices were up 7%, but now we're down 15%. We will get to that, and that is where we talk about the truth in the data. So home sale volume decreased between 20 to 39, almost 40%, meaning that the overall, so interest rates had such an incredible impact on buyers exiting the market, as well as affordability, that it completely slowed the market. So a lot of what we saw and what people have been talking about and how the market is tanking is really a huge decrease in the total number of sales. So sales volume, total number of sales has dropped off nearly half. So that almost brings us back to 2007 in terms of how quickly the volume of homes decreased, just as a litmus and perspective there. The average days on market increased to 35 to 45 days, which I threw this stat in here because I thought it was really important to understand pre-pandemic. So we just got out of a pandemic market where nothing was normal, right? Nothing was the same. So I really want to have that understanding of we were in such an accelerated market for such a long period of time. It felt normal. It wasn't. We always are adapting to what the conditions of the market are. But just so you can kind of see, if the pandemic did not happen and we did not have the pandemic market, we're really not that far off on what the average days on market should be in a more healthy, normal market. And then the market reactions, in my opinion, are reminiscent of the rate increases from 2019. So we saw these slowdowns and shifts in the market in the fall, late summer and fall of 2019. We actually saw interest rates around 5%. So the market in 2019, the beginning or mid part of 2022. In terms of slowdown, days on market, and that sort of thing. So just so you guys see, the market does to present data. How that does.
Is just one moment, Andrea. Is everybody hearing the audio breaking up, or is it just me? Okay,
everyone.
We're having some audio issues. Hello, everyone. Oh, it's clear. Okay. Why don't we try again? It sounds like it might be better now.
Okay, can you all hear me without being choppy?
It's a little shaky.
Okay. Okay, hold on.
Under other hills, internet provider.
Mm-hmm. Agreed. Let's see. All right. Is that better at all?
We can try. It sounds better, at least for the moment. Uh-oh, did we just lose you? Am I still here?
Yeah, we hear you, but we lost Andrea.
Okay. Hear you and see, Daniel. Don't see or hear speaker though.
Okay.
Yeah, one other suggestion is
now?
maybe she can turn off the video.
Yeah, Andrea, would it be possible for you to turn off your video? It might be a bandwidth issue, and if that isn't working, I will find a phone number that you can use to dial in. So I'll do that while you continue talking.
Okay. Okay. Can you hear me any better or not at all?
We hear you.
Is that worse?
No,
okay.
It's okay.
Perfect. Okay.
Go ahead.
Do you want me to start from the top?
No, I think we heard most of this. So just start where you were, or wherever you're comfortable.
Okay, fantastic. Perfect. Let's look at 2020. So I would expect that we would see more buyers and renters wanting to see affordability come into the marketplace. I'm sure many of you are feeling that same way. If you're looking to buy or invest a property, you're looking for concessions, credits for in price, or perhaps an interest rate buy down. I do to also see a seasonal uptick in home prices. As I mentioned before, we always see a seasonal uptick regardless of what the market is doing. And then we are in a market of change, and knowing your local stats and data is incredibly important, especially as we head into a declining market. The market is always in a flow and flux of change, whether it's going up on its way down to a neutral market or declining into a softening market. So looking at what economists are really thinking, they're really actually mixed on whether or not prices are going to continue to decelerate through 2023, which I think is really, really interesting. Seller concessions are also something to think about as it affects home valuations. So you might see that a home has closed escrow and the pending sale is $800,000, the close is $800,000. However, perhaps that seller credited $20,000. And now the sales price appraised is $780,000. Just
Hey, Andrea. Andrea, can you hear me?
Yes.
If it's possible, could we get you to dial into the phone number? I just placed it into the chat, or I could read it to you if that's convenient. But the audio is breaking up to the point where we're having difficulty following. Do you see the chat? My apologies for the difficulties here, everybody. Hopefully we will get Andrea back on the phone quickly. And I'm going to email it to you just in case you can't see the chat. Oh, there it is. Okay. Can you all hear me clearly? I want to make sure this is a Google Meet problem.
Yeah, I hear you just fine.
Yeah.
Okay, great.
Yeah.
Great.
Sorry, you all. I think it's my end.
Thank you. The number you dialed or the PIN you entered doesn't match a meeting that's ready to start soon.
Okay.
What?
Okay, let me try that one more time with the number you gave me. Again,
Okay.
So Daniel, the
believe
pin
we-
you entered is different from the pin that I'm seeing. So I don't know if to give a pin per each attendant.
Oh, they may.
So
I gave you my PIN. Well, that complicates
Is
things.
there another pin?
Yeah, Andrea, you're going to have to go to your calendar and find the calendar invite that was sent to
got
you
it.
and get the pin
Yes.
from that calendar invite.
also, I don't know how it is on the phone, but I'm connected through a browser, and there you can just click on triple dots, and there's an option for you, the phone for audio. That's where I got my pin.
Oh, okay.
Thank you. Ever since the storm, you all, I apologize, but our internet here has been a real mess. So I'm terribly, terribly sorry. I'm certain that that is probably on my end, and I apologize for the inconvenience here.
Though we can hear you well now. I'm not sure.
Oh, of course.
Others. So,
Still feels risky to me. I would love to just try and call in so you all don't.
Let's hold for one moment then and let her do that. While we're doing that, does anybody have a club business or anything that they want to discuss as we are transitioning outside of Intel? Any open questions? Any concerns, problems? anything that you guys want to discuss.
Could you please repeat that? What do you mean in outside Intel?
Well, we're taking this meeting, which was the Intel REI Club, and we're moving it externally to Intel. The main reason being in that Intel is moving me externally. So I'm taking the whole club and just moving it outside of Intel so that if you want to dial in, you can do that, but it's going to be open to a public audience.
Oh, okay. Sorry to hear that, but thank you for sharing.
Yep. And so I encourage all of you, I dropped a subscription form link into the chat. Please go use that, because in a couple of weeks, I won't be able to access meetup.intel.com. I am going to probably ask somebody who's internal to Intel to continue sending those out, but I don't know if that's the best way of handling it or not. So at least for a couple of weeks, we'll be using meetup.intel.com, but soon we'll be transitioning away from it. And if you want to have that meeting link again, it's right here. I will drop it in the chat.
Daniel, I just put in the number and pin that was in the email you sent me, and it's giving me the same message that pin doesn't.
Okay, well.
Andrea, there is, in the menu, there is that more options, the 3 dots circle that you see.
Yeah.
If you click on that one.
Oh, use phone call for audio. Fantastic.
Yes.
Thank you. I'm going to give that a go.
Yeah, it's right here.
I'm going to go to dial in, and fabulous. I'm going to try that number. Thank you very much for that.
One of the other transitions we'll be making is that the Speakers Hall of Fame is going to be transitioned up onto YouTube, and we'll have the complete video of the recordings there. And we also have a Facebook group where we announce and have an external calendar for people that want. The other thing that you can do is subscribe to the Google Calendar, and this is going to have all of our meetings as well. So if you just want to import that onto your Outlook or your Google Calendar, you can do that as well. So there's a number of ways to get in touch with the group.
Maybe, hey Daniel, maybe about some kind of closure with the ERG side of internals, like whether that's just a static material that points outside, or some way to keep the internal search capability for ERGs to be able to understand where and how to access for new members that would arrive at some point in time.
Okay, sounds good. All right, I see that the calendar access is not working for at least some people, so I will make sure that that is publicly accessible. Google Admin has a lot of options in it, and I'm not familiar with all of them. A lot of times they'll work for me since I'm inside my own organization, but not necessarily for other people. So we'll get that cleaned up. Are you back, Andrea?
Can you tell me if you can hear me okay?
We can.
Amazing. I have to say it's fabulous. All right, you guys, let's come back. Thank you so much for your patience. I know that was probably super frustrating, so thanks for that sorted out. So,
Andrea, can you lean into your microphone a little bit? I think you're a little ways away from it. Oh. We lost you.
I'm so sorry. Can you hear me at all?
Just barely.
Are you by chance on Wi-Fi on your phone?
All right. Are we better?
Ta-da!
That sounds better.
All right. As I mentioned, sorry about that. I know people are taken off, so I apologize for all the technical difficulties. Hopefully you guys can hear me going forward. Are we good?
I think we're good.
Thank you. Everybody threw a thumbs up. Appreciate it. Okay, so let's jump back in. So seller concessions, something that I think is important for you to understand with seller concessions and how that's going to affect home values is more on the appraisal valuation side of things. So if you see a home that closes escrow for $800,000, but the seller offered a $20,000 credit to the buyer, you're not going to see that on open platforms, but the appraiser is going to find that data, and that sale price is no longer $800,000, it's truly $780,000. So those seller concessions are going to trickle down the market to continue to soften prices. It's not usually something that you see on the consumer side, but something I want you to be aware of. And then new construction, they are certainly welcoming back both buyer representation and incentives because they're getting hit the hardest. Their numbers, their sales volume is down over 50%. They're tied to the cost of rising prices, where a home seller who has equity built in can be more flexible with their pricing. So incentives are coming back to the market for new construction. So if that's on your radar, this is a great time for you to move forward in that direction. All right, and I'm ready for the next slide. Thank you. So when we're talking about interpreting the data and understanding what that data looks like, if you look at that bottom portion of the screen where you see in green that 7% change, when you look at the market as a whole, so this is how understanding data and knowing what's being conveyed to you, it is all in truth, but if you're really getting segmented information, you're really not able to look at the whole picture. So when you look at 2021 annual median price over 2022, we are up 7%. However, if you look at the category directly above it, May 2022 to December, so looking at the last month, the market lost 15%. So when you're looking at the data or you're hearing news reports or anything else, please know that sometimes they're taking portions of information maybe that sounds better or to skew that information to favor whatever narrative they're looking to tell you. So while the numbers I gave you previously were 100% correct, it's important to know we actually did see a rise of 7%. However, the offset was we dropped about 15% overall. So Daniel, if you want to drop me to the next slide, we will get through the Folsom Market data. So overall, what's happening in the Folsom Market, so this is one of the things I really want to bring to your attention overall in the Northern California market is we have about 68 homes active in the marketplace, and you can see based on this information, we have about 2 months of inventory. And remember, I talked about how the market has dropped off about 40%, 30 to 40%. Interest rates have recently kind of leveled out and even dropped off. We've seen an uptick in loan and mortgage applications actually come back and start increasing. The reason that's important for us to track all of this information is because when we were looking at the pandemic market, we were anywhere between a week to 2 weeks of inventory entirely. And so how we calculate that is if no new homes came on the market, it would only take 2 months to exhaust the inventory that's on the market right now based on a pending track record, or excuse me, a closing track record of 35 homes. Now you can see that 51 homes are currently under contract. So that 2 month number is going to change dramatically. So as we see the market increase, the months of inventory are also going to go down. I've broken down kind of what that median sales price looks like and how that is broken down in price point for you. Daniel, if you want to go to the next slide. This is just going to give you a quick overview of what the market has looked like in the last 6 months and what I would expect to see seasonally as the market has trended for the fall, winter months. You can see that inventory and pending sales and prices were down as we expected. However, more significantly than we would have expected or anticipated because the market conditions changed so drastically based on interest rates and the market really, really cooled off. If you want to go to the next slide, I will talk about the 4 unique factors in our changing market. So this is something that I really want you guys to pay attention to, and why I kind of pointed out what the inventory looks like is because we still actually have constraints on inventory. Typically, a seller's market is 1 to 3 months, and we start in our market going neutral in about 3 to 4 months.
And as we push 4 months plus, then we are moving into a buyer market. We are starting to see more neutrality in our marketplace. However, we still don't have the inventory to truly support a buyer's market in the sense of valuations changing from that perspective. So interest rates continue to be the wild card in the marketplace. I'm going to turn my screen up just so you can see this a little bit better. Interest rates are going to continue to be the wild card. As interest rates continue to go up, then the market is going to continue to soften. However, if we continue to see rates stay the same and or decrease, we're going to see activity pick back up and the market is going to shift again. Key factors, again, are affordability and inflation, and I really want you to be really well aware of the skewed narratives and data and the information you're getting, just making sure you're really getting the whole picture of what's happening at the market, not just the market is up by 7%. That's not all of the information. The market's down 15%, right? So at this point, I know there might not be a lot of questions because it was challenging to hear me, but if there are any, this would be a great time and I'm happy to pause. All right, great, we'll keep going. Daniel, can you hear me?
Yes, we can.
Okay, perfect. If you want to continue to go to the next slide, we will continue on and get into the benefits of a 1031 exchange. So 1031 exchange, I talked about this actually in one of our prior meetings, and I thought I would take a deeper dive into it at this point. So there's really 5 benefits of a 1031 exchange I think that all investors should really know about, and that's the benefits of the tax deferral, increasing your buying power, your ability to diversify your investments, the opportunity to upgrade, and also plan for estate succession. So, and Daniel, if you want to move ahead to the next slide. So the tax deferral and the increased buying power, what are those benefits? How do they really apply to you? The 1031 exchange really allows you to defer your capital gains and when you exchange for like kind. So think about like kind as not just one home for another. It could be one home for a multifamily, one home for 2 homes, right? There's like kind as long as you're investing. It could even be rural property. So where is the market and where is the investment? You can make that 1031 exchange and move your property and your entirety of your gain to the next property without paying any capital gains on that. So that deferral really allows you to have that benefit so that you can have that extra down to move your and make your money go further. If you want to go to the next slide, Daniel. So that 1031 exchange, how does that help you diversify and upgrade that opportunity? Really, you're allowing yourself to exchange, like I was saying, one property for multiple properties. And whenever that doesn't meet what you're looking for, you can move that money around. They do have, you can go from single family, like I said, to an apartment building, and from apartment building back to a single family. There really are a lot of exchangeable options when you're looking at a 1031 exchange, and how can you make your money work for you and not have the hit on your taxes because you're not a primary resident of the property. And the 1031 exchange is the perfect avenue to do that. Daniel, if you'd like to go to the next slide.
Sure. We have one question, though, from the chat. Shashi is asking, how many 1031 exchanges can you have in a year or in a lifetime?
So there's no limit to the number of 1031 exchanges you can have so long as you're following the guidelines of the 1031 exchange. When you are doing a 1031 exchange, typically the minimum time frame that you need to hold one asset is 1 year. So if you have multiple properties and you want to exchange multiple properties, you absolutely can do that all through a 1031 exchange. They don't have to be sold together. You can sell one, exchange for another. You can sell 2 and exchange down to 1. So you can do a 2 to 1 or a 1 to 2 ratio. It really just depends. But the minimum time frame to hold an asset for a 1031 exchange is typically 1 year.
And then another question from Tarek. Can I use the 1031 exchange in order to buy a primary residence? Or are
So
these...
the short answer to that is no. Some of the rules in the 1031 exchange we will get to, and it needs to not be a primary residence. You can, after a period of time, move into your 1031 exchange property, and that would then, so let's say you have the property rented for 2 years and you decide to move into the property for 3 years, and you're thinking, I'm going to now call this my principal residence because I've lived here for, 2 or 3 of the last 5 years. I'm going to call this my primary residence. Well, unfortunately, under the tax code, I think that changed in 2008, but don't quote me on that. But the government kind of said, hey, we're not going to allow that to happen anymore. You certainly can move in there, but they're going to prorate by the amount of time that you actually had it as an investment and the time that you occupied it. So you would be paying gains on the time that you occupied it and not on the time that you had it as a rental property.
All right, keep putting your questions in the chat. There was
All
another
right,
question. I answered it in the chat, but maybe you have a comment as well. Are there any financial limits on 1031 exchanges?
No, none that I'm aware of.
I've spoken to people in Madison, which is a accounting group that does accounting and qualified intermediary exchange for apartment complexes, and they do some transactions that are in excess of $50 million. So as far as I know, there's no limit.
Yeah, same. I'm not aware of one either. If you want to roll to the next slide, then we can kind of go over part of the reason we do investments are a couple reasons. One, we want passive income for our retirement and or to plan for estate and succession planning. So when you're really looking at estate and succession planning and also a 1031 exchange, it is critical that you have, in my opinion, 3 partners. One, you have an intermediary who's going to assist you with that 1031 exchange, making sure you're complying with all of the rules that you need to follow. And you have a really educated tax professional, a CPA, on board to help interpret all of the tax code and liabilities to ensure that you are staying within the confines of that 1031 exchange. And then you have an agent who understands the 1031 process and the timelines involved. So on succession planning, that is where you are able to transfer ownership of that investment to your heirs tax-free, and we'll dive into what those rules look like on the next slide. So on the 1031 exchange, properties must be used for business or investment and not for personal use. And as I mentioned, you can move into it at a later date, but know that that timeline and the timing that you're going to be in the property will be prorated. When you sell it, you will be taxed on that gain when you occupy the property. The replacement property needs to be like kind. We already kind of really talked about that. Here are 3 and 4 are some of the most critical pieces. So when you're exchanging a property, you must exchange that property within 180 days of selling the original property, the original investment property. Within that time frame, when you sell your first investment piece, you need to put together a document identifying the potential replacement homes that you're going to buy. And depending on how quickly the market is moving, you might have a list of 5 homes, and those homes might go under contract before you finally close and sell on your exchange property. So building a deep list of potential properties for you to identify is critical to stay within that criteria. And then you need to complete that exchange by acquiring that replacement property within that 180 days. And when you're looking at estate succession planning, you're going to be transferring it to your heirs. You can't transfer to a third party. Same rules apply. Your heirs need to use that as an investment piece. If they choose not to, then they're going to need to go through the same steps of a 1031 exchange and adhere to the same timelines that we just talked about. And then they would be subject to some applicable taxes if they were to sell that property and they don't want to keep it. So that would open them up to that. And again, that's when a skilled CPA would be so important to have in your pocket. And then moving on, I want to talk about the 5 critical mistakes that you want to avoid when doing a 1031 exchange. So using it as personal property. So buying a property, saying you're going to 1031 it, and then use it as your primary residence. The government, of course, frowns upon that. They built that tax code around it specifically so that you do not do that. Your failure to complete the exchange within the required time frame, that disqualifies you entirely from the 1031 exchange, and you'd be subject to 100% of the capital gains taxes. If you don't properly identify the replacement properties. So if you buy a home at 123 Banana Street, but 123 Banana Street was not on your list of replacement properties and your 45 days has expired, once again, you are not in compliance with the rules of a 1031 exchange, and you are now responsible for 100% of the capital gain. So you see how important it is to be in line with these rules. They're very straightforward and they're very simple, but they're super important. Anytime you commingle or exchange funds from the 1031 exchange with your personal funds, that is also a huge red flag and an absolute no-no. And then failure to comply with all of the rules and regulations revolving around a 1031 exchange. And let's dive into, last but not least, the terms of a 1031 exchange, because I throw around all this information. I'm probably like, what are you talking about? So like kind is similar in nature, grade, or quality. So we talked about single family to multifamily, multifamily to single family to land. That is still falling under the like kind umbrella. A qualified intermediary is a really important component. I mentioned that earlier. They're the ones that are going to facilitate that exchange. They're going to handle all of the money on your behalf. They're also going to handle the exchange and the asset. So you as the taxpayer, you don't want to touch any of those things because it will disqualify you from your exchange. That identification period is that 45 days where you need to identify that property. Your replacement property is the property you're going to exchange. And boot is anything that you're going to receive in excess of what you've exchanged. So if you have a $50,000 surplus, meaning the property you bought was less, you're going to be taxed on that $50,000, and we call that boot. And so you want to, whenever possible, exchange and utilize all the proceeds from your exchange property into the new home that you're purchasing, the new investment that you're purchasing.
All right. Oh,
yeah.
Go ahead. Do you want to take questions at the end, or do you want me to interrupt you?
Questions now are fine.
Okay. Mario is asking, if we want to rent out our current primary residence, what are the gotchas that are there down the road? Are there any roadblocks to, I assume, 1031 exchanges?
Gotcha. So if you bought, Mario, how long have you lived in your current primary residence?
Let's assume it's several years, I guess. 12 years, he says.
Perfect. I'm only asking just for the concept of timelines. So if you were going to rent your home and you wanted to still take the exemption as a primary residence, you have to occupy that 2 of the last 5 years because you started that property as your primary residence. You could actually sell that within year 5 and take, if you are married, $500,000 capital gains free. If you're an individual, $250,000, even if you rented it. However, if you wanted to go in the 1031 exchange route, absolutely no problem, because you've already moved out of it. You've shown that it's an investment property, and you can then roll that sale into a 1031 to purchase another property.
Okay.
Okay. Any other questions?
Not so far.
Okay, perfect. And then lastly, if you want to go to the very last screen, really the 3 ways to make money in real estate investing, as you probably already know, are cash flow positive, the appreciation, which is typically what our market tends to bear here, and then the equity gain, where your tenant is really helping you to buy equity in your property. And then the questions to really think about when you're looking to buy either your first investment property or just another investment property is, Why are you doing this? Is this a legacy for your family? Is this just for enjoyment? Some people love real estate. I love real estate. Future 1031 opportunities, and then rentals for college students. So if you have children going to college soon, considering buying a property in the area in which they're going to school is a really wonderful opportunity for them, and for you to either continue to keep that as a rental down the road or sell it once they've moved out. So, and then if you want to go to the last slide, I think that wraps it up for us.
All right. I know one of my best friends in college, her parents bought her a home and she rented out all the bedrooms, which covered the mortgage. And so she lived there, with no mortgage payment and, or at least a covered mortgage payment. And the house grew in value after that. So it was a great investment.
Yes, yes. And typically college area towns tend to, you never have a shortage on renters. So that's great. And when you're converting a single, like I like to call it a single door, like a single family home to a multifamily, whether that's 2 units or 3 units, when you do have an unoccupied unit, right, you've softened that loss, because now you maybe are only getting 2 out of 3 of, the occupied units, but you're not just sitting there with a vacant property. So multifamily is a really great way to go when you don't have a lot of other backup funds.
So Brooke is asking a question that's going to lead us back to the definition of a like-kind property. Can you do a 1031 exchange into a fund that could minimize the risk of missing the timing deadline to close?
So they do have funds available, but it's probably one of the last resorts, according to some of the 1031 exchange experts that I've spoken to. I think that's a much more solid question to ask a 1031 intermediary, to be honest. So they have, are they DTSs?
DTS,
is that right?
yeah,
Yes.
Delaware Statutory Trusts.
Yes. So that would be really one of those final phases that you would go into, where you could kind of pull into a fund, sort of, so to speak. But that is a much longer timeline, and you have to really stick out that 1031. You're no longer able to just say, okay, well, I no longer want to invest in CVS here. It's whatever that lease term tends to be in that fund. So you do get a little bit limited on what you can do within a fund like that.
I would also add to that a lot of Delaware statutory trusts tend to be much lower returning than your typical rental might be. You're talking a 2 to 3 or maybe up to a 5% return is what I commonly hear.
Right. So that's why I would really encourage you, even if you think a house is a dog, that you're like, oh, I don't think I would ever want to buy this, building out that list of identified properties, as long as that property is on your identification list, you can still purchase that home within that 180 days. So that's where that identification list really is a critical component of your 1031 exchange.
And Carter has a comment here. I'm not sure if it's a comment or a question. He's saying, and 4 is a tax preference in our code versus other investment classes like 1031. Are we referring up here to 4 replacement property?
Yes. No.
Okay.
3 ways to make money. There's 4 ways to make money.
Oh, I see. Okay.
There are numerous ways to make money. I just like odd numbers.
Specifically to real estate. That's all I was saying.
Yeah.
I think there's
absolutely
people miss the 4th one, and it has significance in real estate because of its tax preference.
Absolutely.
The 1031 being the number one example, one of the number one examples of that.
Absolutely.
Very few classes can be exchanged at no capital gains or deferred capital gains.
Agreed. One of my 1031 intermediaries, he says, he kind of coins it as a swap till you drop, because the minute you want to cash that out, that's ultimately when you're going to be hit with that capital gain. So once you start exchanging in the 1031 exchange world, they consider you kind of swap it till you drop it, and that's when you then pass that on to your heirs.
He must know the refi till you die people.
Yeah, there's all kinds of funny little lingos around, but yes. So again, I want to thank you guys for your patience in the earlier technical difficulties. Thank you for hanging with me.
Hey, everybody, could you take yourselves off mute and say thank you to Andrea for coming in here and talking to us.
Thank you.
Thank you so much. Appreciate it.
Thank you, Andrea.
Thank you.
Thank you.
Thank you.
Thank you.
Thanks.
Thank
Thank
you,
you,
Andrea.
everyone. You're welcome. It was a pleasure to be here. And again, my apologies for the technical difficulties earlier. I hope you got some value out of this. And I know that Daniel probably has some great 1031 connections. I do as well. I'm happy to share those with Daniel. If any of you want to connect with a good 1031 exchange local company, they're a wonderful resource, and I highly encourage you to have those conversations because they will answer all of your 1031 exchange questions, and they're truly the expert in that arena.
Absolutely. There is a previous talk that we have on how to 1031 into a syndication, which requires specialized legal structures to do, but that's possible as well. We've got that talk. But we've got just one or two 1031 talks so far. So thank you for coming and talking on this.
Yes, you're very welcome. Oh, my contact details are on the page on the last slide. But you can reach me on my cell phone and or email is always a great way to connect with me. I'm happy to put it in the chat if that's acceptable. Otherwise,
absolutely. Everyone can see it right now too. Yeah, we're on that page. All right. Everybody, thank you very much. We'll be back again next week, Friday noon, and we're looking forward to seeing you all there. Have a wonderful weekend.
Thanks, Daniel.
Thank you. Have a good weekend.